Good morning, America. Good afternoon from Germany. Here's Pascal. And it is Friday, end of a trading week. And soon we will have a time difference. So I looked up yesterday daylight saving time. And like always, the US is changing the clocks a little bit earlier than here in Europe. We have 2 weeks difference. So yeah, you won't care about it, but I will care because we will have 1 more hour of time difference. So for me, it will be 1 hour earlier when the US market opens and 1 hour earlier when it closes for 2 weeks. And then it will be normal time difference of 6 hours from my time to Eastern time. So we will be on daylight saving time on Sunday next week. So we will have 1 more trading week, but just that you know that there is 1 more hour difference at the beginning of the next week, the end of next week. And the US will stay in daylight saving time. That's the most interesting part, because Europe has decided to stay in one time, but they haven't decided in which, if it's winter time or summertime. So we still need a little bit more time, like always in good old countries like here in Europe. We need some more time. Therefore, we still change our clocks and we will get back to winter time in October, but the US won't, and therefore we will have 7 hours difference to Eastern time. That's really bad for me, because the market will open at 4:30 p.m. and will close at 11 p.m. really late. So yeah, you won't care about it, but just wanted to let you know. So next week, Sunday, we will have summertime or daylight saving time, like you are telling it. So let's see the news today here. We will have ISM non-manufacturing PMI, February numbers. The forecast is 54.5. Yesterday was pretty interesting with the news because it was really bearish. So let's just go back to yesterday to see the news again. Initial jobless claims were lower than expected. So still a good and robust job market here. More important is unit labor costs. Look at this number here, 3.2% instead of 1.6%, a lot higher than expected. And of course, this causes more inflation fears and therefore higher interest rates, or probable higher interest rates from the Federal Reserve. But when Waller was speaking and Kashkari, so Waller was saying, only 25 basis points move. So the market was rallying again. It was really crazy day because all the economic numbers were bad for the stock market because of higher fear of inflation and higher fear of higher interest rates. But Federal Reserve members were telling something different. So for the expectations, we see 26% expectancy for a 50 basis points move and 74% for a 25 basis points move. And you see the changes. So we even went back from the higher expectancies yesterday. It was 31% and it is now 26%. But we were 0% 1 month ago. So you see it is still a big shift to higher interest rates, and we will see how this will end. Yesterday, I think it was Wednesday evening when I saw here 1 more step here. It was 40% probability for 5.75% interest rate, but now it went back a little bit, as you can see, 43% expectancy for 5.5% interest rate. High point here, but no more expectancies here for a lower interest rate at the end of the year. So still a big fear. You see more than 70% are expecting 25 basis points rate hikes here. Just that you keep this in mind, because there's still the chance that the market will pull back in the next days. So yesterday was a pretty interesting day because we just hit the 50% Fibonacci level. We were talking about this in my previous live streams, and I said it would be a big support level where I will take a long trade. And of course, I did this. So I went long yesterday at 11,840 points. Market is open now and it's green again, as you can see. So we are pulling higher above 12,100 points. We still have some time until the news, but market wants to be bullish today. So we are retesting 9 EMA, as you can see here on this day chart, and 20 EMA just above. So let's see if we can go higher than this, but probably we will not close above on the first attempt. But never say never, everything can happen here. So it was a big move yesterday from these pre-market lows, from the bad economic numbers to the Fed speech of Waller. And then we had this turn here to the upside and even went above 12,000. So let's see this on a lower time frame, like 5 minutes. You can clearly see that here on the opening market was pretty weak, but we had 1, 2, 3 times tested this Fibonacci level here. So it was an important level. We were talking about this already the previous week in my streams. And as soon as we went here above the previous highs, as you can see, there was a big push. A lot of shorties were stopped out on these big push here. We went back immediately, but then the market rallied, as you can see. And why did it rally? Yes, of course, because of the speech, but also because of 0DT. We were talking about this in my stream from Wednesday. If you have missed it, just rewatch it. It's really important to understand what is happening here. A lot of volume is in these 0DT options, and therefore there is a lot of market making activities, hedging activities from the market makers, and they have to buy when the market is going higher to hedge their delta portfolios, and therefore they are causing more demand. So more demand means higher prices. Higher prices mean more hedging activities from the market maker, and therefore we have seen this upward spiral. And it didn't end until the end of the trading day. You see here, this was just 25 minutes before the end of the trading day. We almost hit the next Fibonacci level, and then the market turned back. Why? Because the bulls took their profits out here, closed their calls, their long calls, and when they close their long calls, then the market makers have to hedge again. So they are selling their long futures or their stocks, and therefore the market turns back again. So this was just a pullback of maybe 50 points. Nothing to mention if you see this movement of the whole day, but 50 points in just 20 minutes, it's not bad. So it mainly happens because of market making activities. And the same thing here. So today is Friday. It's an normal expiration of the weekly options. So normally we have even more trading volume on Fridays. So we will see even more volatility on Fridays than on all the other trading days. And therefore it can happen again. So if we see a catalyst with the news, then it can turn downwards, but later it can turn to the other way, just because of hedging activities from market makers. So let's see the next important levels to the upside. So to the downside, of course, the Fibonacci level here is still in place. And for the higher term, let's see. So we are right at the 9 EMA level. So we have to break above this one here at first. And then we have, let's zoom in a little bit. And then we have the 20 EMA line here. 20 EMA is right at 12,175 points. You see this was a previous high point, 1, 2, 3 days. So it will be important. And the next one is a lot higher here at around 12,430 points. So this was a previous high on the holiday. And probably we won't go there today. But if we turn bullish next week, so on a second attempt here, we push above this 20 EMA level and we close above the parabolic, then it can change and we can see a lot of pushing to the upside, like we have seen here in January. Look at these 3 days. What was this crazy move here from the lows to the highs? It was 8.9% in just 3 trading days. I wouldn't expect it for the next week, but just to know that everything can happen every day. Just prepare for it. If you are in a short position, please be cautious and set a stop loss really near. So I'm in a long position. It's a small position for my portfolio. So if we're turning downside again, I'm not in big fear because I closed half of my position. I took here the long trade at 11,840. I closed out half of the position at 12,000 and the rest is the winner I will let run. Just being patient and wait for how high the market wants to turn. But always let your winners run and don't cut your winners too early. Always cut your losers. Therefore, know where you want to leave if you are in a short position. Okay, let's see some other stocks and commodities before the news are out. So we have different news today. We have We have ISM non-manufacturing at 10 a.m. Eastern, and we have service PMI, just a 2-star event in 8 minutes, but we will also look at this one. So 8 more minutes. And let's go on with ES future. So ES also turned green yesterday. We could find the level here of the 61.8% Fibonacci. So it's a little bit weaker than Nasdaq, but you see we are right at the same levels now, at the 9 EMA level. The parabolic is a little bit nearer, so yeah, maybe we'll turn earlier to an uptrend than on Nasdaq, because you see here now we are fighting with the 50% Fibonacci retracement and the 9 EMA level. So ES future and S&P 500 can turn bullish earlier than Nasdaq, but it would be good for the market because it's a broader index with 500 stocks and not a specific technology stocks like Nasdaq is. Okay, let's see Tesla. Tesla was pretty weak yesterday, lost 5.5%, had lows of $185.42 at the opening. We went back a little bit, but it was like expected. We were talking about this the whole week. So first shoulder, head here, second shoulder here. This was the neckline. This Fibonacci level is the neckline. And you see that we just went below the previous low here of 187.60. We had lows of 185.40, just $1.20 lower, but just to trigger some stop losses, and then we went back. So everything working like expected here from the technical side. Now we see a rejection here from the support area, but the stock is still weak because it was a big disappointment from Investors Day. No new car model, no new infos for the pickup when the production will start and so on. So yeah, big disappointment from there, and it would just be healthy if we would see a pullback here back to 170 or 157. Let's see if this can happen in the next weeks here. We are still in the sideways trading phase, and I wouldn't take on a new position. I'm out now of my bear call spread. It could be closed right at the opening. I had a 250 strike short call and a 270 strike long call, and I closed this trade with a profit of 80% yesterday at the opening. So no position right now in Tesla, but I want to take on a new short trade as soon as we go below 185, because I'm expecting more short possibilities here to come. Minimum 170, maybe 157 here as targets to the downside. Euro USD, also interesting because we had this big push here to the upside, 0.9%. To the resistance level. It was previous support, then it acted as a resistance. We closed almost at this resistance level, and on the next day, so yesterday, we just made it back. This happens really often, that we see these false breakouts here just to push back because of the economic news. We had a high CPI number from Germany, 8.7% above expectations, and the Euro for the Eurozone CPI, it was also higher than expected. But yeah, no wonder if Germany is higher than expected, then probably the whole Eurozone will be higher. And yeah, it just turned back. Why? Because of bad economic numbers from the US, and therefore higher expectancies for higher interest rates, and therefore the US dollar was getting stronger again and the euro was weakening yesterday. So the same levels are still in place. This area 1067 is still a resistance here. Previous lows are support. We are in a sideways trading here and trying to go higher or lower, just in a waiting position here. But Euro USD should still act as an early indicator for the stock market. We are pulling higher today. It's just 0.2%, but it's indicating an early uptrend maybe for the stock market. So both is pointing in the same direction, and that's a good sign for the stock market. The same for VIX. Volatility index is going lower. We are below 20 now, so there was a big push back here. We had highs of 21.40 yesterday and closed at 19.59, and we are lower today again. So below the 20 level is just telling us there's no real fear in the market. No, not fearless, but no big fear in the market, and therefore the markets are able to rise further. TLT was pulling back in the previous days here. We had this pushback here now to the 100 area. This was a previous support. and is now acting as a resistance. But you see yesterday we went to lows of 99.61. Yeah, let's see if we can go back above, if the interest rate expectations shift back to the lower interest rates. But for now, it's not really looking good on a technical term here for TLT. US dollar, Japanese yen. I'm still waiting for the pushback into this area. Even if the weekly candle here turned red again, you can clearly see it is still in this uptrend here because we left this downtrend, and this is forming the second shoulder right now. So I'm just waiting for this level here to come when the US dollar is getting stronger again. Then let's move on with the commodities. Let's begin with natural gas. Natural gas was pulling higher up to about $3, $2.99 for the May future yesterday. This is the resistance zone beginning here between $3 and $3.10. As you can see, it was previous support, is now acting as a resistance. And yeah, you see the market is bullish here for natural gas. We had the support of the moving averages, and moving averages are now below the current price level. That's a good sign, but we need more pushing into this resistance area. I'm still in my short put, 250 and 260 short put strikes, but they are now 60% in the green. Even if almost nothing happened, because I opened the positions here, we were just sideways trading, then we went down, then we traded higher again. So if you would have gone long a future, you wouldn't have made a lot. So this would be about, what was it to be, 4 or 5%, but I made 60% with a short put because the implied volatility went down, because there's less fear in the natural gas market for further drops here. So we were completely oversold, and now we are normalizing the prices now. Let's see if we can push back into the resistance zone and maybe even higher. I will be ready to open one more short put when I have closed the previous trade with a profit. You are showing the daily chart for Euro USD. Yes, sorry, I didn't mention this was the daily chart for Euro USD regime. First 15-minute candle is pretty bullish on, and Q can wait for the reports to drop. Yeah, we have 2 minutes for the reports. So let's just move on with crude oil and then wait for the news. So crude oil is again going lower today, 1.4%. We were trading higher for the last 6 days, pulling back a little bit today. Let's see how it turns, but the markets are bullish, so maybe crude oil will also stay bullish. We have this resistance zone here, this support zone here on the downside at $73, and on the higher side we have it's loading. Yes, we have this area here at the 82.50 and 83. This should act as a resistance to the higher side, and you still see that we are making lower highs, and we are now forming this interesting triangular. So let's see when we will have the breakout to the upside or to lower levels. Just be patient and wait. I have no trade right now in crude oil. Then let's go to the news. Back to Nasdaq now on a 1 minute time frame so that we can see the market's reaction. Where are the news here? So let's see. Service PMI 50.6, a little bit higher than the forecast of 50.5, but almost in line. S&P Global Composite PMI 50.1 instead of 50.2 expected. That's perfect, just in line. That's like we want to see the news. So no fear, because there's no miss of the forecast, or almost no miss, just by 0.1. And that's just to be taken in line. That's perfect, and market is rising further. Nice, that's how I want to see the market moving to the upside. Still 40 more minutes for the ISM non-manufacturing, but I like the direction today. You can clearly see the parabolic went to the downside, indicating an early uptrend. Then we had the crossing of the moving averages here, and we were constantly holding above this Fibonacci level here. So it's looking good. We are making new day highs now. Let's see it on an hourly chart here. Now the next resistance is the previous high point, and this is, just to remember you, on a day chart it was the 20 EMA level. So this should act as a smaller resistance. 12,175, just 10 points above the current price level. But you can clearly see now we are making higher highs, higher lows, so it's pretty bullish now. Even if the fundamental news from the previous days are not really bullish, you can see how fast the market can turn bullish again, because a lot of early bears, early short traders are caught on the wrong foot, and therefore they have to close their positions, and this causes a short squeeze. So the shorties are triggered with the stop losses. Now we had the 12,175. High point was 12,174.75. Crazy how perfect these numbers sometimes are hit. So back to the 1 minute. Some pullback, there's still some room back to 12,150 for more bulls to enter the market. This was previous high point, should now act as a support there. Which moving averages do I use? I use the 9 EMA. This is the purple line here, 9 EMA, and the blue line is the 20 EMA, and the other purple one here is the intraday VWAP, volume weighted average price. So these are my 3 moving averages: 9 EMA, 20 EMA, and intraday VWAP. You can also look at the 200 SMA. This one is the yellow one, so I don't use it really often, so I just can show it or not show it, and the 15 SMA, but it's almost the same like the 20 EMA, therefore I don't need it really often. But on some charts it's more interesting to have this 15 SMA instead of 20 EMA. You can also use 3 EMA. That's what this one is really near to the current price level. But yeah, I don't like to trade on these low time frames. I don't scalp really often, therefore I don't use 3 EMA. 9 EMA, 20 EMA, and intraday VWAP are the most important ones for me if I want to take on a day trade. Retest of this level. So there was almost no pullback here. It's pretty strong market right now. Really interesting to see. And again rejected from this area. High point was 12,176. It's a good resistance here. Let's just move on with the other commodities until we see the next economic news in about 10 minutes, because we have more interesting news here. If we look at gold, gold was moving higher, so it's interesting to see because the expectancies for the interest rates were higher. Normally this should cause the gold price to go back, but here we see that the gold price was rising again, so maybe the fear in higher inflation and higher interest rates is just wrong, because the gold price is already rising again here. But it can also be technically because we were almost at the lows here, or at 1800. Low point was 1810, and therefore it can also be just a technical reaction from this important support area here. Then let's see orange juice, one of my favorite commodities right now. Why? Yeah, because I'm in a position. I entered a short position. I wrote it in Discord a little bit early here when we had this gap close at 245. Then we went higher, and we talked about this in the previous live streams at the beginning of this week. We saw these wicks on the upper side here indicating some signs of weakness. Almost hit the previous high, just 2 or 3 points below the previous high, and then we turned bearish again. Unfortunately, I talked about every commodity on Wednesday but missed to talk about orange juice, and therefore I missed to enter more shorts here on this day. But yeah, it's in the green now, my trade, and therefore it's good. We hit here even the limit down. As you can see, we couldn't trade lower because there are limits in the commodity markets here. And the next day we opened lower with a gap down. So this was a big push to the downside here. In just 2 trading days, orange juice prices lost about 10%. Today we are trading sideways, but it's looking good. and I'm in the green now with my early short trade. But sometimes it's really better to wait a little bit longer for more signs of weakness. So here you had 2 days signs of weakness. This would have been perfect to enter the next trading day on Wednesday. But yeah, that's it. Not a big mistake, but always some room to do it better next time. Okay, this trade is still open and my target is minimum the previous low points here. And if we go lower than the $2 or 200 cents area. Then we have sugar. I entered a sugar short trade yesterday. Unfortunately, not yesterday. Yeah, at the opening yesterday. Unfortunately, again a little bit too early. Maybe we went higher today. Sugar is rising 2.5%. But yeah, next week we should turn bearish again. Seasonality is turning bearish for sugar. So I'm still in this short trade. I'm just waiting, being patient for the bearish seasonality to come. And yeah, let's see what happens here with sugar in the next days. Yeah, Nvidia somewhat had a position, I think it was short in Nvidia, but I was analyzing that Nvidia is pretty bullish, especially on the weekly chart here, because look at all these green candles. So this week will be interesting. It could be the first week closing red, but yeah, we are about to make just a not a Fibonacci, just to make about a doji candle here. We had a lot of wicks to the up and downside in the previous weeks here, indicating some signs of weakness, but we were still pushing because we had really good earnings numbers from Nvidia and a good outlook. We are near this resistance zone now, so it could be that we will just trigger and test the 240 level and then see a smaller sell-off here in the next trading days. But I wouldn't enter a too early short right now because it's still looking pretty bullish here. But as you can see, we had the previous rejection here at the previous highs. This rejection was about 27%. So there is some room from these high points. If you would go back 27%, this would go here back to about $173. So there is some room to the downside, of course, but I would not enter an early short here in Nvidia as long as I don't see some more signs of weakness. Red weekly candle or minimum hit the resistance here at $248. Okay, if you have some more stocks you want me to analyze, just write them down in the chat. We still have 7 minutes until the next news are out. I will move back to Nasdaq to see what's happening. We are above this resistance now, still looking pretty bullish. So hopefully the next non-manufacturing ISM is also bullish. So maybe we can manage to hit my next target, 12,250, my next target. And my final target would be 12,400. I don't think that we will reach it today, but then I will be out with 2/3 here. If we will hit 12,250, this would be here at the parabolic dot here. It was a previous low, as you can see. 12,265 was a previous low point of the day on February 17th, and it was a low point on these 2 days here. So it could act as a smaller resistance together with this parabolic. And if we close above, it could be bullish for the next days and weeks, because the parabolic would go to the downside here. Is that where you will go short? No, Carlos, I'm not talking about going short. I would wait for some signs of weakness. So we have seen here this sign of weakness. So you could have taken an early short here because we were trading really near the parabolic. And we were making higher highs, so this could have been interesting to take on a short trade here, but I missed it by just 20 points. My short entry was at 12,810 and I missed it, and I wasn't in front of my screen to enter it later. And then at the end of the day I thought, oh no, it's too late, I won't enter it. Maybe we will see a smaller recovery the next trading day, but it didn't happen. So we went down and I missed this giant short, unfortunately. So yeah, sometimes it happens, but it's not a big thing if you miss a trade. Better miss a trade than enter one too much or too many. and this one will turn negative. So better staying at the sideline and just watching and learning instead of being in the wrong trade or with a too high position size. 4 more minutes. If this next report is good, I think we might stay bullish until next Wednesday reports. Yes, this could probably be the case because we have no major news on Monday and Tuesday. Just look at the news for next week. The most important news will be, here's Fed Chair Powell testifies on Tuesday, but yeah, I don't think that this will cause the market to rally or go down. But on Wednesday, we will have the ADP non-farm employment change. This will be an early indicator for non-farm payrolls on Friday. And of course, more job numbers with Joel's job openings. Fed Chair Powell testifies again. And then on Friday, we will have non-farm payrolls and unemployment rate. So this will be these will be the most important days next week, Wednesday and Friday. So there can be turning points. But until Wednesday, probably the market can go higher. So I'm not going with more position size here in this long. It's enough because I've taken longs here. I already went out with half the position here. But the rest I will just hold at up to 12,400. Then I would be out. And if we are rising further, I would just wait for a short entry to come. But I'm not trying to focus on a short entry right now. Just waiting for the news. 3 minutes. So let's see again the news today. 54.5 is the forecasted number. And if we can manage to stay in line or be a little bit lower than the expectation, this would be perfect. But as you can see, the forecast is already lower than the previous number. And because all the other numbers from economic news were really bearish this week, it was already priced in a lot of bearishness, I would say. And therefore, even if we are a little bit higher than the forecast, the market can stay bullish. It's not such a major news like CPI, and therefore the market won't go crazy with a 200 or 300 point move on this news. It's just a normal 3-star event. So we are right at the important 20-day EMA, but the news can push us higher or act as a resistance here at this area. 1 last minute and then the news are out. Let's see this on a 1 minute time frame. Sorry, I have to change. Okay. Bostic is speaking again today, so this can also act as a catalyst depending on what he is saying. Maybe he's just saying the opposite than yesterday. Let's see what the market wants to do today for us. You see 9 EMA is acting as a support. It was acting as a support previously here and is also acting as a support now, but everything can change with the news as catalyst. I would never trade the outcome of the news, always trade direction. Let the market decide which direction it wants to turn, but then take on a trade in the direction of the market. And the number is a little bit higher than expected. Still lower than the previous number, 55.1 instead of 55.2, but higher than the forecast. Some indecision here. Normally we could say, okay, it's bearish now, but services PMI is just in line, 50.6 instead of 50.5. So nothing too bad here, I would say. It can still stay bullish. Maybe just retest some previous supports here and then turn bullish again. Let's just see the next 1 or 2 minutes. And then I will let you trade on your own on this Trading Friday here. On a 5-minute time frame, we still have room here back to the 9 EMA. 12,162 points about. So this doji was indicating an early change of direction. As you can see, it acted as a turning point. But it's always difficult to say if it's a real turning point when the news are out, because you see these spills to the up and down side. And sometimes we just need 10 or 15 minutes to close at the same level, right? At the same level we had before the news, just to trigger some stop losses on the upper and lower levels here. This happens pretty often if the news are almost like the forecast. It looks like the economy is still growing. Yes, it is. So there's no big fear of a recession anymore, but there's more fear now again because of higher inflation and interest rate levels. But recession fear can come back as soon as the job market will turn negative and we see higher initial jobless claims and so on. So a weakening of the job market, then recession risk or fear, recession fear I would say, recession fear can come back. And therefore I wouldn't say too early that it is a soft landing, like Jerome Powell is saying on every Fed meeting. Just wait. It can take 2-3 more months until we will see in the job numbers that the economy is really weakening. And we still have high credit card spending. It's nothing good on the long term for the economy if people are spending on credit cards, because they have to pay high interest rates now. And there will be a hard hit, but it takes some time until the hit will hit the market. So be patient and wait for the important levels to come. So we are at the resistance area now. Let's see if the market can turn back. Bulls are taking over now, or trying to take over. It's looking good. Parabolic is still bullish, as you can see here. DI plus is above DI minus, so also the ADX is showing this uptrend is still in place here. The same on a 15-minute time frame. We see here a strong uptrend with ADX and the same with parabolic. And on the hourly time frame, the same. Parabolic is indicating an uptrend. We are above all moving averages. ADX is strong on a 4-hour time frame. The same. Parabolic is on the downside. ADX is showing an uptrend. So everything is pointing to an uptrend, as you can see. Therefore, I'm in a bullish mood. Of course, we can still be rejected. It is an important resistance area, especially on the daily time frame, because we have this 20-day EMA here. I don't expect the market to close above, but I would be happy if we would do so, because if we can manage to close at or above 12,250, then it would be a really bullish sign for the next week. But even closing above this 20 EMA level would be bullish. So closing in this area or higher is bullish for me. But everything can happen, so I have a stop loss in place. If we go below the 12,000 level again, then I will be out and I will still have a profit with my early long here I took at the Fibonacci level. Do you think it will retest down to 38.2? Yeah, it probably will. The question is just when. Will it do it today, or will it do it in 1 or 2 weeks? So overall, I still think we have to go lower. It was too fast to the upside, and the economic news are not the best, and the interest rate is pretty high. It's no good thing. If we stay there for half or a full year, the economy will have some difficulties to cope with this high interest rate. And we are still rising. So it's not a good sign in the medium or long term for the stock market this year. But I'm patient. I will wait. It's the same like 2020 and 2021 when the stock markets were rising like crazy. Even if you thought this couldn't be real because of the pandemic, but it was real because of the cheap money. And now the money is pulled out of the market and the markets are still rising. So there has to be something wrong. But in the short term, we sometimes don't see this. So in the short term, there are other rules than the economic fundamental ones Therefore, you have to be patient because the fundamental rules play out in the long term over months and years and not over days and weeks. Okay, I hope you had some nice insights today. If you found my live stream interesting, then please give me a thumbs up and consider subscribing to my channel to be informed I go live next time. Of course, I will be live on Wednesday and Friday when we have the important news next week. Oh yeah, we are turning more bearish now. Probably retest of the volume weighted average price here. Let's see. A little bit more bearish now. Maybe just wants to close a little bit of the gap from pre-market. So if you wouldn't look at the futures, you would see a gap because the closing was below the 12,100 level yesterday. And therefore we have a gap in the index, not in the future, because the futures are traded 23 hours a day, but in the index. And therefore it could be that we will just retest the 12,100 or just below where we closed yesterday and then turn bullish again. So this could also be the case today. Yeah, but overall, please consider subscribing to my channel if you haven't done so far. And thank you for being here in my live stream and writing in the chat. I wish you a nice trading day, nice trading Friday. Hope you will have some profits. Good start into your weekend. We will see us next week. Goodbye.